Alright guys, welcome back to the channel. So in this video we're going to be diving deep into the RSI, but more specifically looking at how we can use RSI divergence to really increase the accuracy of our trading opportunities. So I'm going to be sharing with you a strategy that uses RSI divergence alongside some tips and tricks and tons of tested data so that you can see the performance of this system, take it away, go and test it for yourself and really get the ball rolling with your trading. So you're going to want to grab your pen, grab your notebook and we'll get into it. Alright, so the RSI is an indicator used in trading that measures the strength of the market, and it stands for the Relative Strength Index. So there is many ways that you can use the RSI, but today we're just going to be looking at RSI divergence. You can use this alongside many different price action strategies to give your trade entries more accuracy, right? So RSI divergence is quite a simple concept to understand and it is highly effective if used correctly. Now, obviously this is going to take some work on your part to go back into the charts and just identify it yourself, build up your reticular activating system and just get yourself used to being able to spot the divergence, right? So there is two types of divergence. You have regular divergence and you have hidden divergence. But for this strategy, we want to focus on regular divergence, okay? So regular divergence is like this, right? So as you can see on the screen, this represents price and this is what we want to look for and what we want to see if we're looking for short opportunities, right? So if we're looking to sell the market. So we want to see price action putting in higher highs, right? So price is putting in higher highs. Meanwhile, on the same moves, the RSI is putting in lower highs, right? So as you can see, the RSI is diverging from price. So price is putting in higher highs. Meanwhile, the RSI on the same moves is putting in lower highs. And if we was to look at long opportunities, right, so we want to get long at this level once we get the divergence, you can see that price action is putting in lower lows. Meanwhile, the RSI is putting in higher lows. So that is what we call regular divergence, and that is what we're going to be using for this strategy, right? So using RSI divergence can be quite a good indication that price is likely to reverse because, as you can see, the price is putting in higher highs and the RSI is putting in lower highs. It means that price is pushing higher just on less and less strength. Incorporated at certain levels and alongside certain candlestick patterns, certain rejection patterns, right? This can really make for some solid entries. So I'm going to show you some examples of RSI divergence, literally just scrolling back on the chart that I'm on now. And all of these, apart from one, are valid trades, apart from one that happened at 12 o'clock at night. But I'm going to be showing you the RSI divergence and the rules of engagement into the strategy, right? So price action is putting in lower lows, right? As you can see, price action is putting in lower lows. And if we look at the same moves on the RSI, right? If I just move this along, the same moves on the RSI is putting in higher lows, right? So as you can see here, lower lows on price action and higher lows on the RSI. So now we know that the price is making lower lows on less strength. We want to have some indication that price is likely to reverse, and we're going to do that by candlestick patterns and candlestick formations, right? So that can be in the form of pin bars, tweezer bottoms or 3-bar reversals, right? So as you can see, lower lows and price action, we're actually at a level of structure, okay, looking left. So if we look, we got a level of structure looking left, which we haven't broken and closed below. We got divergence on the RSI, and we've also got a pin bar print, which is a rejection candle, signifying strength to the upside. So if I put the replay mode on here, this is what the trade would have looked like in real time, and you can see how I entered the trade and how they played out and how I took targets on the baseline test, right? So once I got the pin bar, I'd wait for the session to close. Always wait for the session to close. It's very important to ensure that the candle is still valid when you go to enter, right? And once we have a valid pin bar, which is this green candle here, I want to place a buy stop just above, a few pips above my candle, so that when price moves in my direction, I get entered. I don't want to enter at market in this situation personally. That's going to be down to personal preference, right? I want to make sure price is moving in my direction before I enter the trade. So after that, I'll place my stop loss a few pips below the low of that candle, or if I get in this situation, there's a lower low that's sort of on the same move, on the same swing, right? I'll place it, and it's pretty close, I'll place it a few pips below that low, right? Just to give myself a little bit of added protection. And the way that I was testing this, I was testing it as a 2-to-1. And again, I suggest that as you go through your testing, that you track different levels, right? So you can track this outside level of structure, inside levels of structure, all different types of things, right? 1-to-1s, 2-to-1s, 3-to-1s, whatever you want. I tracked a 2-to-1 as a baseline and took some other notes as I went. So stops a few pips below the low, targets at a 2-to-1, right? Divergence on the RSI, and as you can see, nearly get stopped out of that trade. Alright, so as we're moving on now, you can see that we do actually get some RSI divergence here, right? So you can see that price action is putting in higher highs and the RSI is putting in lower highs. Now, I didn't actually get entered in on this because price didn't come down and enter me into the trade, right? And as you can see, price pushed up and gave us another valid entry signal here. So higher highs on price action, lower highs on the RSI. And we got a 3-bar reversal at this point, right? This grey candle here would have been a valid entry for me. However, this was at 12 o'clock at night. So this would have been actually entered at market on the 3-bar reversal. So on the 3-bar reversals, I enter at market. Same with the tweezer bottoms and tweezer tops. I enter them at market. It's only the pin bars that I place limit orders, right? So that's how I tested this system and how I trade a lot of my other systems, right? Again, stops go a few pips above the high. 3-bar reversal gets entered at market. 2-to-1 trade for the baseline test. We roll over and hit targets on that, right? So as you can see, this is now a buying opportunity. So price action is putting in lower lows, as you can see. Lower lows, again, we've got previous structure looking left. That's something you can track in your testing. And the RSI is putting in higher lows, and that for me is a valid 3-bar reversal, and it allowed me to enter this long opportunity, right, on that 3-bar reversal. Again, my stop loss goes a few pips below the low, right, looking for a 2-to-1, and we push up and hit targets on that. Oh, gone too far on this, but now again, right, so we're out of this trade, and as you can see here, price action is putting in higher highs. Okay, so higher highs on price action, lower highs on the RSI. So how I tested this, and something that I incorporated into my rules when I went along and tested this, is I needed a minimum of 2 candles in between the highs, right? So as you can see, from this green candle to this green candle, we've got 1-2 candles in between, right? And that is a rule that I put into my testing as I was going. That's a rule that I incorporated as I was going through in my testing, to have 2 candles in between the 2 highs, right? So obviously I've got this green candle here, which gave us this high. Then we've got 2 candles, and then the next high, right, which we had divergence on. Okay, so look, price action this is a bit of a messy one. They're not all going to be clean cut, and you can have another rule in your testing and say that you only look for divergence in between swings, right? The only reason that I would take this is because that I know that on the 15-minute time frame that they are actually swings, right? Again, that's something you're just going to have to train your eyes to see, and that just comes from reps in the market. So look, if I just drop down to the 15-minute, you'll see what I mean, right? So this move here is actually a swing, right? So look, from there to there, this is the move we're looking at. That is actually a swing, and we're getting higher highs on price action, whilst the RSI is giving us lower highs. So we've got divergence on the RSI. We just want to see some indication that price is likely to reject. Now, again, we get this green pin bar, which is a sign that price is likely to reject off of that level, right? And if you look left, we do actually have inside structure looking left, right? So again, once we get our trade set up, this is a pin bar, so we want to place limit orders or sell stop orders, right? So that we're only entered in a sell once price moves in our direction. So we place our stop loss a few pips above the high of the candle, and then we place our targets at a 2-to-1. Now this did actually hit a 2-to-1. just about, and then it rallied off. So as you can see, this trade rolled over and just about hit targets, just scraped targets. And then again, we had, if I just remove this, you can see that between this swing and this swing, we're getting a lower low, ever so slightly lower low, right? And RSI is putting in a higher low. And we get a pin bar at this level, right? Which, you know, sweeps this level of structure here, taking some liquidity. We've got RSI divergence and we've got a pin bar showing rejection of that level. So again, we want to place our buy stop orders a few pips above the high of this candle. Our stop loss goes a few pips below the low of our pin bar. So this green candle, we're looking at this green candle here. And our targets go at a 2-to-1, right? Just for the baseline test, 2-to-1. Again, you can track different levels, like this outside level of structure here. You can track all different types of things, right? So as you can see, we push up, hit target, which brings us into our next trade. Okay, so our next trade, again, you can see that price action is putting in higher highs, right? And the RSI on the same move is putting in lower highs, right? So higher highs on price action and lower highs on the RSI. We then get a pin bar form at that level, right? And if we look left, we've actually got previous structure again as well. Previous outside structure, which I suggest you track in your testing to, you know, just as an added filter. So this is gonna be a potential short. Again, I say potential because we only get entered into the trade if price moves in our direction. So we place a sell stop below the pin bar, stops a few pips above the high, looking for a 2-to-1. You can see we hit targets. And this brings us to our last trade entry that we are actually in at the moment. And I just want to show you this on a lower time frame as well. So it gives you some ideas of some other places and some other strategies and price action techniques that you can use this on. So as you can see, right, we're putting in lower lows on price action and higher lows on the RSI, right? So I don't need to draw it out. You can see that we're putting in lower lows on price action, higher lows on the RSI. Another thing I would pay attention to, if you look at all of these, you can see that on the buying opportunities, we go oversold and then we come out, right? On the selling opportunity here, right, we go overbought and then we come out on the divergence. This opportunity right here, we go overbought and then we come out. This buying opportunity down here, right, we go overbought on the first test and then we come out. That's something that I would track alongside structure as well. Okay, and we actually got in on this green candle here, right? This small green candle, this pin bar here, okay? And again, we place our buy stop a few pips above the high of this candle, right? Our stop loss a few pips below the low, and our targets at a 2-to-1. And as you can see, we've started pushing up off this level. But if we drop down to the 15-minute time frame, you can see that this is actually a price action pattern called a descending channel, right? And these descending channels, a lot of the time when you get the divergence, you'll have a descending channel that is actually forming. Not all the time, but it's good to look out for because these have a high probability and a high strike rate, especially when you look for the completion of these channels at a previous level of structure. Another place that you can look to take RSI divergence on is a double bottom. And we do actually, again, get a double bottom here. Right, so a double bottom literally is just when price pushes down, okay? We get a test of a level. We then push off of this level and then we come back down a second time to retest the level. So what we like to see on the double bottoms is either equal lows, or in my personal preference, I like to see a sweep of this level, right? The first test. I like to see the second test come slightly lower. And to me, that's a liquidity grab, right? I see that as, it's basically like a stop hunt. And if you're unsure of what a liquidity grab is or a stop hunt is, I'm going to link the video in the description. Again, we're going to want to see lower lows or equal lows of a certain level, right? And we're going to want to see price diverging from the RSI. So lower lows on price action and higher lows on the RSI. Alright guys, I really hope you got value from this video. If you did, make sure you drop us a like, hit the subscribe button so that you stay up to date. So wherever you are on your trading journey, I hope you have a good week and I'll see you on the next one.